All right, so there's been a pattern for the last few weeks. Concerns about the trade war between the US and China, then talks of negotiations, then concerns again. As Bongani showed today, the JSE up by 2%, something of a relief rally. What does it all mean? Owen and Nkomo from Nkunzi Wealth Group, thank you for being with us.
Thanks for having me.
Firstly, there is no trade war, right? We're just threatening a trade war.
Yeah, it's been a bit funny. We moved from the days of worrying about a nuclear head being sent across the oceans to South Korea, and to these guys promising to catch up and have coffee and talk and become friends. You know, all of a sudden we're moving to a trade war that's threatening to destabilize the stock markets for quite a bit. But you know, yesterday I was talking to guys in the market and I said, we don't even know what the extent of these tariffs and in these trade wars are going to be, and why and how they will directly affect global markets. You know, and you know, before the end of the day, I mean, surprise, surprise, instead of having been down 3% at the end of the day, we're down only 0.48%. I think people started to think that, started to look hard and realize that there's no facts at the moment on the table to kind of quantify the damage that these tariffs would cause to global markets. And at the same time, you know, the Americans, I don't think they're stupid. I think they realize that Donald Trump is playing a very dangerous game. They're not the only ones who can go around levying tariffs against their global trading partners.
So even though there was that relief rally earlier today, the danger is not over in your mind, because we still don't know how this will pan out.
Look, it's not over, but then again, you really are playing with a madman out called Donald Trump. I don't think he's very reasonable around global issues, honestly speaking. You know, you need someone who's going to drill some sense into him. He needs to start thinking wisely about how he engages the rest of the world. You know, he's been so aggressive and abrasive. I mean, from the time he was going to be appointed as president, you know, with all his drama around building a wall between America and Mexico, some of the things that he promised to do were just not going to be feasible. And some people in the Republican Party are starting to get worried about him. And so too is the market.
Some people would say he's actually looking like a genius right now. He's delivering on a campaign promise, for one. He said we're going to get China. And suddenly Americans are talking about how unfair trade has been. And he seems to do this, threaten something huge, but that leads the opposition to the negotiating table. Isn't he being quite smart?
No, look, I mean, it's a lot difficult. It's a lot more complicated than that, in the sense that America also exports a lot of its own products and services to the rest of the world. So I really think that, in my humble view, he's probably going to start toning down his conversation points around these trade wars, because you just can't sustain a world where you are, you know, not letting the markets decide pricing and things like that, especially for a big country like America that depends on importing some stuff, raw materials they import, and then they export some finished products and services. I mean, they do a lot of work with the UK, with Asia, etc. And I think if trade conditions continue to favor America, you will see retaliation from the rest of the world, our trading partners to America. And this is why the markets continue to be volatile, because of the lack of certainty.
Well, apparently China is talking about soybeans now, and maybe that's the thing that Donald Trump did not reckon with, that there's huge volumes of soybeans going to China.
Exactly. I mean, you know, I don't think that homework is being done.
How can you not have that information?
He doesn't do his homework. Hey? He's a man with a gun. He's just going around shooting everywhere he can and when he desires to. And I really think that he needs to start being measured about his decisions around how he relates to the rest of the global trading partners. It's a big problem. I mean, can you imagine if these things were levied against Africa? It wouldn't be easy for us to raise our hands and say, Donald Trump, you can't do this. Remember, in our negotiations with America around AGOA, we always came out second best. But for a country like China, that's the second biggest economy in the world, and that holds a lot of U.S. bonds, I think Donald Trump is playing a very bad game.
So we've actually got exemptions in the past from some tariffs being part of AGOA. Does it look like those days are over, where Africa is treated differently?
No, look, I think Donald Trump has really been focusing on the big trading partners. Those are the guys who's been holding a gun to their heads. With us, Africa has sort of got a bit of kid gloves approach from Donald Trump, and I don't think that there's any risk that any of those things are going to get changed drastically. I think he's after China, he's after everyone else who's big and has been against America.
But then explain how we, as an emerging market, could get caught up in the whole trade war if it's the US and China.
Oh yes, obviously. I mean, we were a big mining country. We export some steel and some iron ore, and if any of the products that are in that space, in the mining space, get marketed into America, obviously we do get affected. We saw a negative reaction from some of the companies that produce, steel and iron ore in the country. Companies like Kumba and Exaro obviously came off when these things were muted by Donald Trump, and when they got implemented, they sold off even more. So that's why it's important for us to get a better settlement from the Americans.
And even this talk of this affecting Chinese economic growth, which is very important for us, isn't it?
Yeah, definitely. I mean, China is growing north of 6.5%, and if any economic destabilization happens to America because of these trade wars that are happening now, we will definitely get affected. But I think it's very important for the Americans to realize that their economy is not going to continue to tick up aggressively without a successful Chinese economy. So that's why I keep saying that Donald Trump needs to be pulled back a little bit.
All right, besides the trade wars, there's been the Stein hard hit this week. You're talking about resilient property group, very important, the property sector. Tech stocks have been affected by Facebook. What are the big market drivers for you besides this?
Yeah, look, I think we're in an environment where regulation of the stock markets in the country, the JSE and the smaller junior markets, has got to start getting more intense. The reporting standards have to get more intense. I mean, if you look at Stein, they just gave us the latest round of news they gave us is that some of their properties have been overvalued. And then, if you're looking at trying to salvage any money out of that group, and you've been valuing Stein's properties at a premium, all of a sudden now you have to pull back the pricing on those on the valuation. Of course, So if you continue to look at the property sector that you've been talking about, there's a report that we're waiting for that's supposed to come out anytime now. It was supposed to be out end of March, where an independent report is supposed to be produced looking at the going-ons at the Resilient Group, which encompasses Fortress and Napier Castle as well as Green Bay. That report is meant to shed light into whether or not there was improper trading of these shares, and a whole lot of other accounting issues should be put on the table for us to be able to decide what we do with that sector.
Could this be a Viceroy type report?
No, look, I mean, it was obviously along the lines of Viceroy, people digging into this company's numbers and finding out that valuations did not justify the earnings that we were getting from these companies. It's a great set of companies. They were run by a smart gentleman, Des De Beer, from Nedbank, but unfortunately the market just started blindly believing that everything that he put out there by way of raising capital was going to be the right way, or was going to do well for investors. That company and its cluster of companies around it, Francis, has cost the investing community about 200 billion rands in the first 2 months of this year. But no one is talking about it because we don't buy furniture from them. We're talking about Stein, of course, it's a furniture play. Yeah. But these property stocks are sort of in a niche market. But it's just a very big drop in the property sector, and it's cost quite a lot of people a lot of money.
Can we handle any more companies behaving badly? Thank you for your analysis, Owen and Nkomo. And let's take a look at how the markets ended. Here's your main financial indicators.